we call as TDS. Now, see, suppose this section was introduced, say, 20 years back, and this concept of TDS was introduced back then. The main reason of introducing tax deducted at source was that people who were not filing their income tax returns, okay, they used to not report their incomes, and therefore they used to escape the tax net. So how would the government know that somebody is escaping to pay tax because they are not filing their returns, they are not doing anything to declare their income. So therefore many of these people who are not filing returns were escaping the tax net. So to bring such people under control, to make sure that they are filing their returns and disclosing the incomes, they introduce this tax deducted at source. So what happens in this is, suppose say today I have today there is a businessman, ABC Private Limited, okay, and he's conducting business, okay. Now as a business person, he needs to give salaries to employees, he needs to pay rent, he needs to pay fees to the CA, or he may be hiring some professionals to do some freelancing work, or there may be some contractors doing transportation work. So as a business person, this guy will have to be paying many expenses, like say rent, okay, professional fees, to a CA, for example, or he may be paying some advertising expenses, or he may be paying something like salaries. Okay, some commission sometimes, because to a sales agent he may be paying some commission. Okay, so these are all the various payments which you see in the profit and loss account of a businessman. Okay, now today this person is paying rent, okay, and this rent is being paid, suppose, to an individual. He is paying the rent to an individual. Say this is some person called Rishi. Okay, he's paying rent to this guy. And say professional fee to CA, this is being paid to, say, Aditi. And advertising expenses, this is suppose being paid to Google. Salary, suppose he's paying to A, B and C. And commission he's paying to one sales agent. Okay. Now, Rishi is a kind of person who does not like to file taxes. Okay. He will want to escape the tax net. He is getting rent in his bank account. Okay. Or he may be getting rent in cash also. And he does not like to file his income tax returns. So he will, at the end of the year, not do anything, and he will pocket that entire income into his bank account, and he will not pay any taxes. Now the government knows that there are such people existing. So what do? This TDS was a solution to that. Now, when ABC Private Limited is making the payment of rent to Rishi, they will deduct some tax and they will pay to Rishi. How? Like say rent is suppose 1 lakh. Okay, suppose rent is 1 lakh per month. And every month this much amount is being paid to Rishi. Now we will learn in the chapter of TDS, which is a separate chapter for you guys. So in the chapter of TDS, you will learn that whenever any payment is being made to individuals or to such persons by a company, they need to deduct tax for various kinds of expenses. So for rent, there is a prescribed TDS rate of 10%. So what ABC Private Limited will do is, while paying 1 lakh, they will deduct 10,000 rupees. They will deduct 10,000 rupees and they will pay only 90,000 to Rishi. They will pay only 90,000 to Rishi. What is this 10,000? This is called as tax deducted at source. This 10,000 is called as tax deducted. What does ABC Private Limited do with this 10,000? I'll tell you now. So ABC Private Limited tells Rishi that you give me your PAN number. You give me your PAN number. So Rishi will provide to ABC Private Limited his PAN number. Then ABC Private Limited will file TDS returns. Will file something called as TDS returns. Now this is in 24Q, 26Q. There are various forms prescribed for TDS filing. What is this TDS filing? ABC Private Limited, when he is filing the return to the government, he will tell the government, see, today I have paid rent to Rishi. Okay, and Rishi's PAN number is this much, and is this, and the amount deducted is 10,000. Okay, and that 10,000 he will pay to the government because this is government's money. It is tax deducted at source. So this 10,000 he will show in that TDS return. He'll say this is Rishi's PAN. This is the amount I have deducted, and this 10,000 I'm paying to you, and there will be a challan. Okay, and that 10,000 will be paid to the government. Now this 10,000 is actually income of Rishi only. Okay, the 10,000 is income of Rishi, but ABC Limited is depositing that 10,000 as tax of Rishi. Like if Rishi is not paying the tax to the government, this 10,000 is being tax paid on behalf of Rishi to the government. So this 10,000 is deposited to the government as tax of Rishi, not of ABC. This is tax of Rishi being deposited to the government. Now, Rishi will have, now once this TDS return is filed, when Rishi opens his income tax e-filing account, so each and every person will have their tax filing accounts. Like today, even if I am filing my returns, I have my login ID, my portal, my login ID password, and I can go inside the portal and file my returns. Okay. So in my income tax e-filing portal, there is something called as Form 26AS. There is something called as Form 26AS. Whatever today ABC Limited has filed, this 10,000 he has filed, that Form 26AS will capture that automatically. It is a computerized thing that once the return is filed by the company, Rishi can then open his 26AS and check whether he is getting a credit of that 10,000, meaning whether he is getting a benefit of that 10,000 or is it getting recorded in his 26AS. So in 26AS, what will it be written? It will be written as ABC Limited, okay, and it will be written as 1 lakh is the amount of payment made to Rishi, and out of that payment of 1 lakh, net only 90 is made, of course, but 1 lakh is the total amount to be paid. Out of that, 10,000 is deducted and this 10,000 is reflected. So 1 lakh is reflected and 10,000 is reflected. So then what happens at the time of filing the income tax return, Rishi will declare income from house property. He will declare income from house property. Suppose he got 12 lakhs as income. Because ideally, it's not 90,000 the rent received. Rent received is still 1 lakh. The amount accrued is still 1 lakh. Just that the received amount is 90,000 because balance 10,000 is paid on behalf of him. So amount accrued as rent is still 1 lakh. So 12 lakhs he will show as house property rent received. Okay. And assume GAV is lesser and all that, expected rent is lesser. So house property GAV is 12 lakhs. He will take any municipal taxes paid as deduction. Suppose say there is nil, okay, and then he will take 30% deduction of standard deduction. So out of 12 lakhs, he will take 30%, 3 lakh 60, and suppose say there is no interest on loan, okay, and then he will say this is 8 lakhs 40,000 income from house property. Okay, and on this, suppose he calculates his tax payable. On this, he calculates his tax payable. Suppose that he has no other income, he has nothing else, salaries, income from other sources, nothing else he has. This is the total income he has. Now on this, I need to calculate what is the tax payable. How will I calculate? Suppose say he's an individual and he is below, he's an individual and he is below 60 years of age. Then you calculate and tell me, where's my calculator? Okay, so 8 lakh 40, one of you please calculate and tell me. 8 lakh 40 is the total income. So from 2 lakh 50 to 5 lakh, okay, it is 12,500. How did I calculate? It is 5% of, it is 5% of 2 lakh 50. Okay, and on the next amount, which is 8 lakh 50 minus 5 lakh, on 3 lakh 50, 20%. Okay, so if you're not understanding the calculations, please tell me. These are the slab rates. Up to from 2 lakh 50 to 5 lakh, it is 5%. 5 lakh to 10 lakh, it is 20%. So 5 lakh to 10 lakh, 20%. So 8 lakh 40 falls in the second slab. So 8 lakh 40 minus 5 lakh into 20%. So this will be 3 lakh 40 into 20%, which is
68,000.
68,000. So total is 80,500.
80,500, yeah.
On this you add 4% cess. How much is it?
3,220.
Okay, and then this comes to 83,720. Okay, so suppose this is the tax payable. There is no rebate under 87A because his income is more than 5 lakh rupees, so there is no rebate. So therefore, tax payable as per the slab rates is 83,720. Now, what about this 10,000? This 10,000 is nothing but tax paid on behalf of Rishi. So this is like an advance tax. So on behalf of Rishi, ABC has already paid off the tax. So now he will take credit of that because that tax is already paid off. So out of 83, he need not pay 10,000 because that's already gone to the government. Only the balance amount he needs to pay to the government. So that's why we will say minus TDS paid. Okay, this is nothing but like an advance tax. This is nothing but like an advance tax which ABC has already paid to the government on behalf of Rishi. So that's why I minus that 10,000 from here. And I will keep, and probably I'll use the terms, I'm taking a TDS credit. I'm taking a TDS credit. Basically, I'm trying to say I'm taking a credit for the taxes already paid. So I'm taking a TDS credit, and now 73,720 only needs to be paid. So out of 83,720, he only needs to pay 73,720 because he is already getting that credit of 10,000. Now today, if suppose say Rishi does not want to file his tax, and he keeps silent, he doesn't file the computation and he doesn't do anything about it. The government will send him a notice. Because it is captured in his form 26 AS that there is some income which is coming to him. If there was no TDS, there would have been no TDS filing, and therefore there would be no form 26 AS being generated. In the form 26 AS, you can see that every month 1 lakh is being paid to him and 12 lakhs rent is coming to him. But when the government checks, okay, form 26 AS is saying that he is getting income, but he has not filed his return, they will send a notice to him. They will say that today you have some income, taxes have been deducted, but you never filed your returns. What is the reason? So they will start interrogating him for that. So therefore TDS, if somebody has TDS deducted, They cannot abscond from paying taxes or filing their returns with respect to the incomes that is disclosed in their Form 26As. So therefore, the government can get an understanding of whether the person is absconding or not. So that is why this entire TDS thing was introduced by the government, so that the person to whom the payment is being made, it is not for ABC Private Limited's benefit. ABC Private Limited, so basically what is happening, they are shifting the onus to the company. They are shifting the onus of TDS on the company, that Rishi anyway is absconding. I don't care if Rishi files the tax or not. Today I am vesting the responsibility on ABC that if you don't ensure that TDS is deducted properly, I will penalize you. So the government is now coming behind ABC Limited, and they are saying that it is your responsibility to make sure that whenever you're making a payment to someone, whenever you're making a payment to somebody, you make sure that you're deducting TDS. If you're not deducting TDS, I will penalize you. So in turn, the government will punish ABC Limited if TDS is not being deducted. Okay. Therefore, the companies will have to make sure that they are deducting TDS, and therefore the government will ensure that whoever the payments are being made to, like Rishi or Aditi or whoever it is being made to, they are not absconding from paying taxes, because they can see in their Form 26As what is the income that they are getting, and hence they should be filing their returns. So TDS is on the payments made. Okay, TDS is always on the payments made by the company. So ABC Limited, on the payment made to rent, they have to deduct TDS. On the payment made to as professional fee to Aditi. So today if he is paying me, I have to ensure that TDS is being deducted. Okay, otherwise, and when I open my Form 26As, I can see my client has paid me this much and this much of tax is deducted, and therefore in my ITR I have to show that this much is the tax credit I can take, and I can file my return. So I cannot abscond from paying taxes, because I know that it is captured by the government that I'm earning income from so and so companies and they have paid me the fees. So it was a very smart way of introducing smart way of understanding who are absconding taxes and catching hold of them. Similarly, advertisement expenses, salaries also, if I pay salary to somebody, I already deduct the tax and then I pay to the employee, so that even if he's not filing the return, today the government knows that that guy has earned some income and commission. So that is the entire concept of TDS, that whenever a payment is being made by a person who is doing business, they should ensure that TDS is being deducted. If TDS is not being deducted by this person who is making the payment, he will be punished under the Income Tax Act by way of Section 40. By way of Section 40, he will be punished. So how will that punishment happen? Now, the Act says that if a payment of rent is being made, suppose say rent is being made, and TDS is not deducted by ABC Limited. Obviously, that rent goes into his P&L account. This 1 lakh of rent which he is showing over here, and every month 12 lakhs he would have showed in his P&L account, that 12 lakhs of rent paid to Rishi. The government is saying that on this 12 lakhs you did not deduct the TDS. Now I will not give you the benefit of the expense. I will not give you the benefit of the expense. I will disallow 30% of that. I will disallow 30%. Normally they do. Earlier when I was studying, they used to say disallow 100%. But now they are a little considerate. They are saying that disallow 30% only. So out of 12 lakhs, 30% of the expense will be disallowed, unless and until you don't make the TDS payment. So TDS payment can still be made to the government by paying some interest, by paying some penalties and all that. If you're filing late also, but do file it. And whenever you're making the TDS payment, that 30% which was disallowed, in the next year when you're making the payment or whenever you're making the payment, you can take a deduction. So you can disallow in 1 year, and you can allow it. You can allow that 30% disallowed in the next year if you are making the payment of deduction in the next assessment year. So that is the thing over here. If you are not deducting TDS, then 30% will be disallowed. Okay. And in case of a non-resident, okay, in case of a non-resident, suppose say ABC Private Limited is paying to a non-resident some salary, okay, or he may be paying to a non-resident some advertising expense. Maybe because he wants to host his website on say some foreign countries, and he's paying some advertising in the foreign countries, and he's making a payment to a non-resident. Now normally non-residents, they don't file taxes in India, but the non-resident is earning income in India. The source of income is in India. If you will remember the residency chapter, residential scope of income, the non-resident, for him, if the income is arising in India, now, if I'm asking, the income is arising in India because the business is in India, advertising is happening for an Indian company, the source of income is in India. Non-residents supposed to file taxes in India and pay that tax in India. But the government can't keep running behind non-residents because they don't have a PAN in India, they may not have a presence in India. So how can they run behind non-residents? So they tell the companies to deduct full income tax for them, like not just 10%, they may ask them to deduct it 30%. There is one section 195, which again we'll read in the TDS chapter, that for non-residents, you're supposed to deduct 30% of tax, which is like as good as our 30% slab rate, which is the highest slab rate. So you deduct 30% as income tax. So therefore, even if the non-resident is not filing the taxes in India, at least the government is getting its tax. So even if the non-resident is absconding, the tax has already come to the government's account by way of TDS. So they are happy that the tax has at least come. So for the non-residents also, the Indian company or the Indian business person has to ensure that the TDS is being deducted. If they are not deducting TDS on non-residents, there is a full 100% disallowance. For residents, it is 30%. For these people, it is 30%. But for a non-resident, if you are not deducting taxes, you will get a 100% disallowance. Okay. So when you're doing an audit, so today when you go for an audit or when you are joining articleship, Meenu, when you're doing audit, you have to check, when you're doing an audit, you have to check in the expenses. Whenever you're vouching the expenses, you have to check for expenses whether TDS is being deducted or not. If TDS is not being deducted, you have to make sure you're disallowing that expense to the extent of 30% or to the extent of 100% if the taxes are not deducted. Okay, so that is your section 40. So if you have any doubts on the